Welcome back. The current economic slowdown has had a ripple effect on a number of sectors in South Africa, including the banks. Recently, the Reserve Bank fined the 5 South African banks a total of 34 million rand because they had weaknesses in control measures, just as other banks around the world. Joining us to talk more about the trends and the outlook in the sector is Pierre Fourie, who is the KPMG Director in Financial Services Audit. Pierre, Byron Lotta is staying with us with this conversation, so is Lindsay. Obviously, this performance of the banking sector paints a clear picture of exactly what is happening globally.
It is a reflection of what's happening globally. The financial sector in South Africa are just reflecting that. And the control of weaknesses that you've just talked about relates to your basically anti-money laundering procedures. Right. And we've seen a number of breaches in the African sector. And the African sector are also dealing with some other complexities, like not having street addresses, and creating that full environment is so necessary. But then going further, other legislation, like the conduct legislation, you've talked about earlier in Kenya, some of the implementations of interest rate cappings, that is also rethinking the banking sector.
Right. Up here. South African banks inherently are pretty well behaved, I guess, compared to global standards. We've had some recent financial results coming through, ABSA, Standard Bank come to mind, which show a few creaks in terms of credit impairments and so on. Although the market tended to shrug them off, more focused on, I guess, political news is what's moving the banks at the moment. So, I mean, what's your take on that?
Correct. And what we're actually finding is we had a very benign credit performance over the last 3-4 years. We are seeing the first upticks. I think the last interest rate hike that we had earlier this year have just pushed consumers over that top. That last one was the one where we're starting seeing delinquencies, we're seeing bad performance, and we are going to see more impairments going forward.
Pierre, it's Lindsay in Cape Town. That 34 million fine between the 5 banks. I mean, I don't want to talk glibly about quite a large amount of money for most people, but I mean, it's just a little tiny slap on the wrist for them. But moving on, in fact, it was probably more for the ratings agencies than the banks themselves, just a shot across the bows, if you like. How big a deal is regulatory measures that are constantly being put in? How big a challenge is that for the banks?
The banks are struggling with regulators. In South African environment, they typically have to deal with at least 5 active regulators, having to deal at any bank at any point in time, having 3 of the regulators on site, and you're investing lots of resource into that. The biggest growing department in a bank is the compliance divisions, typically doubling over the last 3-4 years, while your other sectors have had a reduction of staff. You see staff numbers in the sector coming down. However, you need to invest in compliance, increase in systems, and the bank that's going to win is the bank that does the best in compliance and innovate the most to get a good straight-through processing and good client onboarding right up front, because it's too late to try to correct it at a later stage.
Pierre, just picking up on that regulator bit, there seems to be a changing role as far as the regulator goes, and central banks are taking a more active role, but also they need to be more clear in how they communicate. Give us a sense of this trend and how it's affecting the sector.
In South Africa, we've been quite fortunate having a South African Reserve Bank that's very good in their communication, very active regulator, and very clear in what they want to do. And the question we're going to have to deal with in South Africa, how are we going to deal with the Twin Peaks regulation, with the establishment of a new conduct authority, which will deal with the conduct in South Africa of the banks, how they deal with customers, ensuring good customer outcome in the end. And that we are not certain at the moment. That still needs to be established, and that uncertainty creates lots of noise at the moment in the banking sector.
Now, when you talk about banking sector, I guess it's quite a broad term, because you've got the retail banking, and then, of course, you've got the investment banking side. Are you seeing a shift at all to more standard retail banking because of the sort of negative portrayal of investment banking? I guess, a retail bank, for example, Wells Fargo, affords a much higher multiple than a lot of the more predominantly investment bank, because it's safer, and you can understand as an investor more what's going on.
Yeah, I would question the safer, but I think it's more understandable. I think that is correct. And what we're going to see is the casino banking, as it's termed, going to start disappearing. In the corporate bank, is going to be much more vanilla, much more standard operating procedures, standard processes. And what is clear, the global bank is not going to be in existence for much longer. It's going to be local country banks focusing on customer, consumer. It's going to be regional banks looking at payment streams across countries. But the large global setups, that's a thing of the past.
Pierre, let's just go back to the biggest challenge for everybody in this country at the moment, and that is the economy. As Byron quite rightly said, there are a few cracks appearing in the four banks, the four big banks that have reported during bank reporting season. And I can only say that a couple of the CEOs I've spoken to in the last week or so have said that since their June numbers have been put out, this is not the banks, this is just a couple of retailers, the trading hasn't been as good as it was this time last year. So people are suffering. Confidence has been shattered, and that will affect the bank. So do you expect more cracks in the future?
What I'm expecting is more delinquencies. We're also seeing reduction in loan volumes. In the banks, there's a stricter credit criteria in place. Everybody is having that uncertainty and waiting for that outcome. So it's going to be clear the next probably a year to 2 years. Because of the uncertainty, there will be a reduction in numbers. There will be higher impairment numbers, and leading up to IFRS 9, where we're going to get to expected losses, people will be more clear and more transparent around impairments.
Pierre, we leave it there. Many thanks for making time to come in this morning. To speak to us, that was Pierre Fourie, who's KPMG Director in Financial Services Audit. After the break, we'll focus on some of the disruptors of the global markets.